Good morning, Carl. It still is morning here on the West Coast, 10:35 and 1275.50 our last trade on the SPOOs. And
it's all ball bearings these days.
It's all ball bearings. And what do you mean by that? It has nothing to do with the debt ceiling, I believe, is what you mean by that.
Yep. This has nothing to do with what's going on in Washington, D.C.
But it's good noise. It's good chit-chat. I mean, it's funny. Celebrated my anniversary with my wife this weekend, and actually had an overnight without the kids last night at a fine little boutique. And we had breakfast in bed, and we're watching the CNBC, which I don't have in my office. So CNBC was on this morning as the sky was so sunny pre-market, and we were at 13.05.06, and I said to my wife, they're going to hammer the crud out of this market as soon as it opens. And sure enough, 13.05 down flush to 12.75 as all the bull birds. We like to make fun of the perma bears, but quite frankly, Carl, I don't care. I'm just a trader, and the trade was so freaking easy.
Yeah, I think this has been an easy trade since the end of May. So I think you just need to understand the context of what you're trading in, okay? I'm only in scalp mode now. I think there's going to be lots of tricks and treats on the way. I do believe we at minimum have an appointment with 58 half-ish, and ultimately, potentially, 11.53.
Well, and we talked about the number, probably going back to May. We said 11.20, 11.80, and that's right in the middle of what we said then. We said we'd probably get a rally into this fall, which we did, and we tagged that 13.55 here in early July, and ran back to 13.50 there late July, and now, again, like you said, it has nothing to do with the debt ceiling. It has nothing to do with the ISM numbers today either, folks. It's just the same old, which is debt ceiling or not, ISM or not, there are, the economy continues to be soft, and the market knows this with interest rates. Again, the 10-year was down to 2.7, 2.6, even with all this debt ceiling noise. So the market knows what's going on, and you gotta read between the static and the noise that's on TV, guys, because it's not helping you. You gotta put yourself, agree wholeheartedly. You gotta trade right now. It is not a long-term buy and hold or sell and hold for that matter. This is a consummate trader's market. A trader's market, if you're a trader, is a great thing. If you're a buy and holder, which we were in for the last two years up until the spring this year, that was not a trader's market. I mean, it was a buy and hold. And little dips were bought. Now every rip is sold. It has changed.
Well, we came to the end of QE2, whatever it was. Before we came to the end of that, the economic data was turning south. It's no mystery to me. You just have to understand the context of what you're trading in. I don't think this is over yet on the long side.
Right.
So I would caution people about getting, end of the world. This is it. This is the top in the market.
No, and again, I think that's our point that we're trying to make, Carl, is continue to trade this thing. There will be opportunities to get long. There'll be opportunities to get short, and it's kind of fade the extremes right now. I mean, oil to me was a no-brainer again, pumping up to 99 pre-market, and here ran all the way down to 93.40. So it's the same old stuff. I mean, some big moves are available to be had, but you've got to. It's not a momentum market in that you can't buy things that are going up right now. And you can't sell, sell things that are going down. It's a faders market, and there are times where faders make money, and there are times when momos make money, and you need to know, like you said, Carl, the context. So stop being a piker out there and just trade. And whether it's momentum or fader, you have to figure out where we are in that market and in that context and play within the rules.
Yeah, I mean, I guess if the ISM numbers this morning would have been different than they were, I may have scratched my head a little bit. You know what I'm saying? Because that would have changed the texture of the market, I believe, with with the hoopla in Washington D.C. But
Right.
man, you need to understand that economic data is soft, and I'm not sure that these are the real numbers. So you maybe ought to think about that, but it doesn't really matter. Just understand the context of what you're trading in.
So we got the vote officially tomorrow. They'll get it done, whatever, and then so I tweeted out last night. So we found out what the raising of the debt ceiling was worth, which was 1.25%, and that was it because we were already trading 13.05 yesterday when they announced it. So that's all it's worth. So now you know that the market has already told you. So it's already done. Even if they sign it tomorrow, you might get a little bump again, but. Whatever. Then we're back to recess. Everybody goes on vacation, and we're done in DC for a while. So it's going to continue to be a trader's market, and why overthink it? And you're right. Come in with cash to fly during the day, but continue to fade those moves because whether we go up or down, we tend to go the other way the next day. There's not a lot of continuation either way right now.
Yeah, I guess the thing I would think about for the rest of the week is, we do have non-farm this week, and you need to understand whether or not, if it is a bad number, is it priced in? And if it is not a bad number, is that really the number?
Right.
But so there's some things for you to think about ahead of this. So
food for thought. August, the dog days are here, and keep fading those moves one way or another. Trade them.
It's all ball bearings.
All ball bearings.
It's all ball bearings, man.